Welcome to episode 3 of the Learning to Recharge series. In this episode, we're going to go over sector strength. I've noticed way too many people, they trade sectors that are weak, that aren't showing a lot of strength, that are trending to the downside or going sideways instead of trading the ones that are trending up. So how do you figure out what stocks, what sectors are showing the most strength? On Moomoo, I want you to create a watch list. Go to the plus sign here, create watch list, and just call it sectors. And in that watch list, I want you to look at the left-hand side here, and I want you to just start adding all these. So I'm going to scroll down. You're going to have to pause, but I'm going to scroll down slowly, and I want you to add all these. Now, I don't usually have this watch list because I have enough experience to know already what's going to be moving, which is just AI and tech. That's why I just focus on that. But if you're a beginner, all of this is going to look like nonsense. But add all of these to your watch list and put it inside the sectors section. And once you have that done, let's just go through each one and let's see if you notice something. So XLC, the communications services sector. How has it been performing? It's doing pretty good, right? It just keeps going up on the monthly. By the way, you want to be looking at the monthly time frame because we're looking at the bigger picture as to how these specific sectors are performing at this current time and in the past and historically speaking. So as you can tell, this sector, it's not doing bad. It's, steady growth. Now let's go to XLY, which is consumer discretionary, and you can see it's kind of just, again, steady growth. Whoa, what happened here? Consumer staples sector, how is that performing? Oh, it's just been going sideways since September 1st of 2024. So for over a year now, it's just been going sideways. So what does that tell us? It tells us that any stock within the consumer staples sector is going sideways. So why would you want to trade that, right? Like, why would you want to trade something that's just going sideways? If the whole sector is going sideways, because the whole sector has to be going sideways. Like, a lot of stocks have to be going sideways in this sector in order for the ETF to show us this kind of price action. So this is what I mean by sector strength. Are you seeing strength right now from XOP? No. This is, it's not weakness, it's not strength, it's nothing. It's just sideways action. You wouldn't really want to trade it unless you want to trade the range and buy like at the bottom of it and at the top. But it's better and easier to trade something that just keeps going up. So you would want to trade XOY, or more specifically the communications services sector or the consumer discretionary sector, because at least those are climbing steadily. They're not very volatile, but they're slowly climbing over the long term. So let's continue up the list. The energy sector. Energy select sector, it's just going sideways. So again, it's not looking good. Why would you want to trade this sector or any stocks within this sector? The financial sector, again, steady climb, but let's just go up the list. You can see XOV, the healthcare center, which this is why I always tell people I don't care for healthcare. I don't care for healthcare because this is why. When a bunch of tech stocks, AI stocks were trending to the upside, this thing is just tanking. It recently broke the downtrend, and it's still showing weakness regardless. And if AI tech goes into a 2-month or 3-month downside, which is my prediction, healthcare is just going to come down anyways. It's just going to follow. So the fact that it's doing the inverse, the fact that AI and tech were pumping and this thing was dumping, this is why I don't trade the healthcare. I just don't care for healthcare. Even if it's healthcare plus AI, I don't care for it. I'm going to stick to the sectors that are showing strength, which we'll get to those. But as you can see right now, you're starting to see there's some sectors that are just garbage to trade. Imagine trading this while AI and tech are booming. You would make less, quite frankly, because the whole AI sector is just coming down. So let's continue. So hopefully you're writing this down, because this is what I mean by finding sector strength. So you go through each one and you figure out like, this sector's kind of garbage. Let me buy, the one that's constantly going up higher. And you'll see that here. Let's go to this one's going sideways. Material select sector, sideways. Real estate sector, sideways. The utility sector is booming right now. It is. I don't know why that is. That's interesting. Let's see what else. Let's go up to the Bitcoin mining ETF. The Bitcoin mining sector, as you can see, while healthcare was tanking, what is Bitcoin doing? What has Bitcoin been doing? Whoa, what a reversal. Look at this. Look at this. So in April of 2025, this thing moved, the ETF moved 474%. The sector, of course, we know has been moving a ton, right? So no one should be surprised that this sector is outperforming the healthcare sector. Let's measure the healthcare sector. You should know how to measure because this is the third episode, so you should not be skipping episodes. So you know how to measure, right? Wow, that is pathetic. The healthcare sector, since its recovery in August, has only made 13% return. Meanwhile, the Bitcoin mining sector, the ETF that keeps track of that sector, 474% return, which probably means the Bitcoin miners are returning way more than that. So imagine buying healthcare sector instead of this. You'd be kicking yourself. By the way, in April, this sector, the Bitcoin mining sector, was already booming. Meanwhile, healthcare was just trying to find its bottom. So that's what I mean by finding sector strength. You need to go through each one of these and figure out, okay, what's showing a lot of strength, because you want to trade that because that just keeps going up. At some point, we're going to have a bear market. That's going to happen. But you know that historically speaking, this sector likes to go up a lot in a bull market. Meanwhile, healthcare in a bull market, it's doing the opposite. It's going down, and then it finally finds a bottom, pumps a little bit, and then that's it. It just kind of 12% for that whole sector. That's garbage. Quantum sector, been performing very well. Over the long term, it just keeps going up. Any bear market dip is a hell of opportunity, and you can see here when it bottomed out, from bottom to high has moved 50%. That probably means that this is the quantum sector, by the way. So that means the actual stocks within the sector are performing very well. They probably moved hundreds of percentages. So quantum, looking good, right? Bitcoin mining stocks, looking good. A lot of strength, a lot of money to be made on these sectors. The robotics sector, same thing. April to now, 78% move. That probably means the robotics stocks have been moving hundreds of percentages, which our stock has. It moved from $2 to like, what, 8? So 4x from the moment I alerted it back there. XME, metals and mining. No surprises here that it's also got a lot of strength. And so on. This is rare earth and what is this? Rare earth and strategic metals. So look at that. That's been booming too. Let's look at gold. Of course, that's been booming too. Autonomous technology, booming too. Generative AI, booming too. So you can see here that the sectors to focus on are the sectors that have a lot of strength are technology, period, just technology, AI, all that technology, gold, and rare earth. This is why I've been saying rare earth stocks are, especially the one that's MP, the one that's backed by the government, that's a buy, and it'll go to 150. I believe that. Robotic stocks are going to go higher over the long term. Quantum stocks, same thing, and Bitcoin miners. So you can see a huge, just as you go through the list, you can see which sectors are the ones that you should be focusing on. Too many people, they don't look at this. They just go, oh man, healthcare looks good, right? It looks good, and they don't realize that it's probably one of the worst sectors to trade. So hopefully you learned something from this. There's a lot of other ETFs that can measure specific sectors. You're going to have to look for those. I'm not going to make a huge watch list. I'm just focused on the ones that I like to trade. And like I said, I don't even have this watch list, the sector watch list. I'm going to delete it after because I don't need it. I already know what stocks to trade within those sectors. So there you go. So hopefully you have the same watch list and start figuring out what sectors you want to trade. And yeah, that's how you measure sector strength. Literally just look through and wow, it's just nothing but AI and tech that's been booming. and you can see the weaknesses across all the other ones, just kind of going sideways or nowhere or just steady climbing, right? Like, there's nothing wrong with the communication services sector. It's just kind of, it's only moved 23%. It's, it's not as much as the Bitcoin mining, which moved 474%. So within that sector, there's a lot of Bitcoin miners that moved hundreds of percentages, if not thousands. So, if anything, if I'm being honest with you, no BS, just keep the, it's up to you, right? But keep the Bitcoin mining ETF, the quantum ETF, the bot ETF, the humanoid robotics ETF, the metals and mining ETF, and the rare earth and strategic metals ETF, gold ETF, and the autonomous technology ETF, and finally the generative AI ETF. Keep all of those on your watch list, because those are the ones that we're at the beginning of the AI revolution. So keep those on your watch list, because we're going to be able to measure out sector strength and when to buy the dip more than anything. Because even quantum here, you can see it's had bear markets, right? It's had downside. It's had months of red. But guess what? Over the long term, it's nothing more than buying opportunity. And you make way more percentage-wise, because these are the sectors with strength. Why? Because we're in the AI revolution. That's why you're seeing these sectors show so much more strength, give people so much more return, versus the other sectors down there like real estate, which is just going sideways, or the financial and energy sectors down there. So there you go. How to measure sector strength and find what sector to trade. I mean, you might like to trade something less volatile. Maybe you hate quantum stocks. Maybe you hate gold. Maybe you hate all these at the top here. Maybe you prefer to trade real estate because you're like, hey, it's going sideways. I just buy the bottom and sell the top. Yes, I make less percentage wise, but I like this. This is my style. That's fine. People are going to have their different styles, their different preferences in terms of volatility, noise, etc. So it's up to you. You do what you want. I'm just showing you what I do and what I would keep. But me, I'm the one who has this strategy of looking at sector strength. So I already know what's moving and what's going to move in the future, just because of this. That's it. I don't think I have to say anything else. That speaks for itself. So there you go. How to find sector strength 101 with shades. Practice it. Look at other ETFs. Go to Grok or ChatGPT and ask, hey, what ETFs exist for this specific sector, and maybe take a look at how that sector is performing.